Portfolio Builder members, welcome to our Friday update. We're closing out a very handsome profit on the SPY ETF. We'll review today's results, talk about how to get in and out of this trade, how easy it is, and then give you a little hint at our new trade alert today. Now, keep in mind, I will not reveal the new trade alert in the live stream. You have to be an active free trial or a paid member. So we'll talk about how to make sure you don't miss out on trade alerts in a minute. To start off, let's just look at how well we've been doing. This is one of our best periods of trading to date. And in fact, if we look at our total return, you can see in August we closed out our second highest profit of all time, 3%. And again, this program is all about playing it extremely safe, extremely smart, and achieving a small but safe, consistent return of 1 to 3% a month. Now, the only month we've had a loss was in July, and that was because we were expecting the tariffs to come out a little early than they did, which made a tiny, tiny loss. We were betting that the tariffs would come out in July. They hit in August. You can see we did have the prediction correct, just a little early. Okay, let's jump into today's trade alerts. We can see how the profits were generated and what the plan is for making income over the weekend with the SPY ETF. So the end result was a $2.39 profit on the SPY, or $4,063 of income in the past 48 hours. Now, the downside is we could have made even more if we were trying to be an aggressive growth investor. But our audience is not interested in growth. We're not interested in wild swings in our total account value. So it means we have to give up some of the profits from time to time. So in this instance, we actually gave up $2.62 out of the move that we predicted in the SPY. And we still walked away with $2.39 of profit per SPY. So let's take a look at the exact trade alert we put on Wednesday and how that all panned out. And then we'll take a look at what our view is of the future. Okay, so the first step in each trade alert is going to be to close out the previous week's trade. And so our previous trade had a profit of 26 cents. Which is not bad, but it's no $2.30 some odd cents. Step 2 is to add on top of your SPY shares option contracts. Now, the options contracts are designed to do two things. First, we're going to sell a call option, which is called a covered call. This has got to be one of the easiest option trades in the world, because it's such a simple and easy, safe way to trade the options market. So you have 100 shares of the SPY. For every 100 shares, you can sell one option contract against those shares. And so in this case, you can see the last trading price of the SPY was at $293.29. And I was harping to you guys that we have a massive rally in the SPY coming at us. And here's how to prepare for it. So we sold to open the 296 call. That means I'm agreeing to sell my shares of the SPY ETF to the option contract buyer for $296 a pop, plus I get to keep a credit of 35 cents. That's not a bad deal. That means I get around $3 of potential profit if the SPY were to shoot up. And guess what? It sure did shoot up. It shot up above 296. It's fine. It's not a big deal. We're not trying to get rich. We're trying to generate consistent, safe retirement income. Now, even though I was quite confident that the SPY should shoot up higher, I know the market's at the whims of the Chinese and U.S. trade war. And so just one tweet can erase all these profits in a heartbeat from either side. That's why at all times we're happy to give up a little bit of our profits to purchase a put option. This means literally North Korea could launch an atomic bomb at Japan tomorrow. Taiwan could start some sort of fight with China. Hong Kong could turn into bloodshed. The Eurozone could break down. Deutsche Bank could go bankrupt. The Fed could fail to lower interest rates and piss off the markets. Who knows? There's so many risks out there. Why worry about it? We always own a put option. And what does that mean? If I own one long put option, that gives me the right to sell my shares to the underwriter of that put option. These are the biggest financial banks in Wall Street who are underwriting these for $290 a share. So we could have woke up today, there was bad news overnight, and the SPY had crashed $10, $20, $30. It wouldn't matter. We would still walk away with $290 a share. That's why we call this trade alert atomic bomb proof. And so you can see in every trade alert, we tell you what the maximum gain is and the maximum risk for the trading period. So once again, there'll be times where we miss out on some of the profit, and that's fine. On the other side of the coin, when there's huge sell-offs that are unexpected, that catch everyone off guard, that makes your stomach really grumble, turn sour, you won't ever have that feeling again when you follow our program, because we always own the put. And that has came in handy quite a few times this year, despite my audience of followers complaining, I call it the peanut gallery, complaining that they're having to give up some of their profits that we've been consistently generating. Now, I'll tell you what, when those big sell-offs do occur, nobody's complaining. We're getting lots of thank yous coming in because they had the put. All right, so let's look at what the results were so you can see the profit we did generate from Wednesday through Friday. And we'll talk a little bit about what we're doing for generating consistent income from Friday to Monday. So all you really need to keep track of to audit these results and your own results are the two items we're going to go over. Number one is, what price was the SPY trading at when you entered your contract? And we can see in this screenshot, the last trading price was $293.29. We entered into what we call a loose option caller for a debit of 21 cents. So let's see what happened today when we closed out that position. So here's what we did to get out of last Wednesday's trade. The put option did its job. It was insurance in case a disaster occurred. No disaster occurred. Meanwhile, the call option we sold dramatically went up in value. So the guy who bought that, he hit a jackpot. He's making a lot of money. Good for him. It doesn't matter for us. We still make the same maximum profit no matter how high the SPY goes. And so we can see the SPY traveled amazingly to 298.33, just as we suspected. And we'll talk about why we're so bullish the U.S. equities market from now until probably sometime in October, maybe all the way through December. But you can see we had to buy back that call option for $241. That means if we go up to our summary, we can see that we had a $5 profit on the SPY, but we lost $2.62 on the option caller. The net gain was $2.39 times 1,700 shares is $4,063 of income. So that's a great return. And without spoiling it, I will say today's trade alert is just as bullish. But if you're on a free trial that's expired, you're not going to see today's trade alert. So if you want to get a copy of the current trade rushed out to you right now, please call Dean at 505-322-7515 to activate your account. Now, we also have a 16-week boot camp that repeats itself 3 times a year that we're allowing people to join who don't feel like they can follow these trade alerts with complete confidence. So if that's you, if you want to get 2 hours of training every Tuesday for 16 weeks and turn yourself into an expert options trader in terms of being able to generate safe and consistent retirement income from the SPY ETF and the TLT ETF, I highly endorse you call Dean right now, 505-322-7515. Class does not start this Tuesday, but it does next Tuesday. So don't miss out on that. And let's take a quick look at our total strategy. We'll look at some of the most recent trades on the SPY, and then I'll jump into the macro news. First of all, though, I want to see who's in the live stream right now who can say hi. Hello, Dean and Jason. Great strategy. Very happy. Thank you, Richard. Always appreciate getting testimonials during our live stream. And who else is out there watching? If you don't mind, please post something in the chat. Just let us know who you are. I can tell we have quite a few people watching live right now. And definitely would love to hear more feedback from everybody who is watching live. Now, just a quick review. The SPY ETF represents 37% of our total portfolio. The other big position is in the bond portfolio, which we just hit a big win on yesterday, betting that the TLT would finally have a sell-off in relation to equities market traveling higher. So the big news coming out today is Fed is doing a speech in about 15 minutes. And my bet is that they are going to announce a tiny, or at least hint at a tiny rate cut in September, that they're not going to rush to drop the rates as fast as some people are expecting. Good morning, Victor. Thanks for posting in the chat. Now, the other piece of the puzzle is our buy and hold portfolio, which is currently in GDX primarily, but also a small position in Bitcoin and Ethereum. A lot of people have been wondering if I think it's still a buy, and yes, now is a great time. This entire month, most likely, at least before the Fed meeting, should be a great opportunity to jump into gold. People have been taking some profits on gold and silver, and I suspect that the trade war will re-escalate in the near future, and that will drive all the central banks to continue lowering rates, printing money, buying up government debt, increasing the monetary supply, and bubbling up all of these assets that we're trading. So that's a look at that. Just a quick review of some of our recent trades. Here's the September 4th trade, and I just want to give you guys a feel for what our average profit or loss is to generate these returns. And now, when you combine our strategies together, it's a very smooth return with very, very little drawdown. In fact, our only losing month was in July at negative 1%. Keep in mind, the biggest hedge fund in the world, Ray Dalio's, has a negative 6% return this year. And he's trying to achieve something like this, where you have consistent returns with extremely low volatility. So again, we're not trying to outperform the S&P 500. We're not trying to outperform just buying and holding the TLT. What we're really trying to do is teach investors how to protect your capital and pull consistent profits out of the market with very, very little work. And so that's what we have done, and why we have a quickly growing audience of investors who trust the bulk of their portfolio with our trade alerts. Now, if we do look at the SPY, we can see our return, and I need to update the September return. But you can see we've had quite a return just on the SPY this year, going from 3% in January, 2.6% in February, 1.5% in March. We broke even in April. May and July, we had a negative 1 return, but if you overlap it with the TLT, the May had a profit. June was our best return to date for the SPY, 3.4%, and in August we had a nice clean 1.5% return. So that gives you a feel for the total return you can generate with our program. Let's take a look at some of the most recent trades just to get a taste of the profit we're pulling. Not every period are we going to pull a $2 profit per share of the SPY. So I don't want you to think that's normal. And if you do the math, all we really need to average in terms of profits to deliver a 1% return per month is an average of 25 cents a contract or a share of SPY 3 times a week. If we can make $25 for every 100 shares of the SPY we have, We can do that 3 times a week, 52 weeks a year. That generates about a 1% return per month. So that means for every $100,000 you have invested, you're pulling an income of approximately $1,000. Okay, so in this trade, we had a 26-cent profit per share. In this trade, which was August 30th, we pulled a $2.59 profit per share. Now again, that's 10 times higher than our normal target profit of only 25 cents. So that is not normal, but it does average out. And you'll see we don't win 100% of the time, especially when there's unexpected Trump tweets coming out that sends the SPY into a short-term nosedive. Okay, in this trade, we're going back to August 28th, 33-cent profit per share, or $33 per contract. We go back to August 26th, there you go, $1.52 loss. This was when the Trump tweets hit us all completely out of expectation. August 23rd, we lost $3.10. Go back before that, we lost 26 cents. Go back before that, we made $2.72. Before that, we lost 30 cents, and before that, we made 59 cents. So you can see it's the slow, steady, safe strategy that delivers the results. And right now, we have a very clear picture of what the SPY ETF will do, most likely for at least the next 30 to 90 days. We'll take a look at that big picture in a moment, but I think we're going to have a very nice series of trades once we completely understand what the big picture is and why we're most likely going to have a period of peace in September and potentially even in October, which may send the SPY to new highs. All right, so real quick, let's just go through my reminder slides and then we'll jump into the macro view of what our strategy is predicting in the near future. So disclaimer, this is based on model portfolio, although a lot of our staff does follow the trades. Everyone gets the trades at the same time to avoid any sort of front-running concerns. Make sure to subscribe to the channel and click the bell. That will help you get this live stream automatically notified to you every day. We have a handful of setups that make sense depending on your lifestyle. If you're okay with doing a quick 2-minute trade at noon Eastern, Monday through Friday, this is a great strategy in terms of how to allocate your capital. You would have 100 shares of the SPY, 100 shares of Facebook on Tuesday. Now, I'm planning to rotate Facebook into Microsoft as the SPY breaks above 300. Once the SPY gets into the 315 to 330 range, which is where I think we'll tap out, which I call the danger zone, that's when we'll most likely rotate into the SLV silver ETF. Then we'll get the big threat from either China or US about rising tensions, about Huawei getting sanctioned. Who knows what exactly will be the new threat. That's when I'm expecting silver to spike to new highs. So that's what you can plan on for Tuesday. Tuesday's optional. If you don't want to trade Tuesday, don't worry about it. I'll show you that setup in the next slide. What is important is that you do follow the Thursday trade in the TLT. TLT has been our highest win rate for sure this year. It's generated the most profits and it's been the most dead obvious trade. And I think it will continue to travel bullishly upward for the next several years as long as this trade war continues to drive on. And from what I can see, the Chinese have no interest in resolving the trade war, especially before the 2020 election. So we'll take a big look at the macro view in a minute. But again, this is our recommendation. If you have a $100,000 portfolio, how you would allocate your capital. And GDX, it's on sale today. It sold off a little bit. This is going to continue to rise as the central banks are all around the world cutting rates, printing money, buying up government debt, and expanding the monetary supply. In fact, ECB is rumored to come out with a bazooka of stimulus in September. We'll see. I think the Fed will continue to drag its feet, lower rates as slowly as possible, which is extremely bullish for all the U.S. products, which we'll take a look at. Now, here's another setup that makes a lot of sense. This costs $66,000 to build. You have 100 shares of the SPY, 200 shares of the TLT, and $6,000 worth of GDX. This way you can skip the Tuesday trade, which is higher risk but higher return, and play it extremely safe. So if you really don't like to have any volatility in your portfolio, you hate losing money, but you're not overly greedy, you won't feel like you're missing out. If we're just generating 1 to 2% a month, this setup is perfect for you. The SPY, which has 504 companies in it, is far more diversified than holding any single security, which we're doing in our Tuesday play. Now, for those of you who do want more excitement, you want a better return, but potentially bigger drawdowns when the market changes direction on us, consider only trading Tuesday and Thursday. Leave out the SPY. Now, again, I am rotating the specific stock that we're trading in the Tuesday play to try to outperform our Monday, Wednesday, Friday results. So far, the Tuesday play has outperformed the SPY by a metric of 2 to 1. And we'll take a look at those returns. They're quite remarkable, and we do have a pretty solid game plan for how to play this Tuesday play. Again, Facebook will most likely get out of either this Tuesday or next Tuesday. Then we'll rotate into Microsoft. The reason why is Microsoft is much less volatile. So when we go into nose-bleeding prices, or what I call the danger zone in the SPY, we want to have something that will lose the least value whenever we do get a shock. Now, if we're lucky and time it perfectly, we'll be able to rotate into silver, most likely in a month, and catch the next big dip in equities with our Tuesday play, expecting a run up in silver prices. So that's my expectations of the market right now. And again, we still have a buy and hold position in GDX, even if you follow this allocation setup, which costs less than $40,000 to build. So that gives you 3 options of how to follow our trade alerts, depending on your lifestyle and how much risk you want to have in your portfolio. So call Dean at 505-322-7515 if you're missing out on trades and you want to activate your account. All right, let's take a look really quickly at that Tuesday return, just so you guys can see it. This one has had some huge returns in a single month this year. 7% in January, 3.6% in February, 3.9% in March, 1.5% in April. A little bit of extra drawdown in May and July, but not much considering the same basic return for the SPY during those months. Only 2 basis points better, and a huge 3.2% return in August. Now, for the buy and hold portfolio, I've had people writing in, is now a good time to be holding gold? I think we may get a little bit of a pullback in September, but as all these central banks start unloading bazookas worth of stimulus, that's going to increase the monetary supply around the globe and drive up the dollar, the U.S. bond market, the U.S. equity market, and I think especially the gold market. So I do recommend you maintain your gold position. And if you do look at our returns in this portfolio, they're huge. Negative 12% in January, sure, but then we came in with a 21% return in February, 10% in March, 26% in April, 60% in May, June 9.6%, a pretty good sell-off in July, negative 11%. In August, we can see it's just trying to consolidate at these very high levels, but I think this run-up is just getting started. So we'll take a better look at what our expectations are in a moment from looking at our live stream data. Real quick, let me stop and see, does anyone have any questions? If you have any questions, please post it in the chat right now so I can see see who's on the live stream and what questions you have. All right, let's take a look at the important content that has been hit the news wire in the last 24 hours. So we got Trump just going on and on and on about how the Fed is the enemy of the state and they need to drop rates. So it's very controversial. Will they really have some sort of political bias to try to create a stock crash? I'm a little doubtful of that because the banks have a lot to lose. They're all connected. They're all working together. And typically, we do see the Fed slowly do what the other central banks are doing as well, which is aggressively cutting rates and starting to purchase up their own government's debt. Now, this is very bullish for U.S. equities, bonds, the dollar, and gold, and very bearish relatively for all of these other emerging market bonds and ETFs. And so it looks like the trend will continue where the U.S. products bubble up until we get escalation in the trade war. And we have seen the stock market is extremely sensitive to news related to tariffs and trade war fears. So my expectation is that we will have a relatively calm period leading up to China's 70th year anniversary, which begins in October. So I think most likely we're going to get a dovish Fed in September, equities rallying hard, the bond market perhaps not quite happy with the rate cut, which I expect will only be 25 basis points. So here are the probabilities for the next meeting, which is only a 25 basis point cut at 93% probability. We can see the dollar continues to remain strong, and this is even with the U.S. creating record deficits. Even though we're spending much more than we make in terms of tax revenues, the rest of the world is in worse shape. And you can see that as the dollar continues to strengthen and strengthen, as it appears the tariffs are just enough to shake up the rest of the world, weaken their currencies, and create a huge flow of capital trying to find safety in U.S. products. Here we can see the PBOC cut the reserve requirements on the banks lower. And this is despite their economy seeing a lot of inflation in food. They're saying that they're going to have a small meeting in September followed up by an in-person meeting in October. Of course, they've been saying this over and over for years. It's hilarious that the markets still believe that. Payroll came in a little weak today, but not bad. Wages are starting to rise. This could be starting to put a little pressure on the jobs market, but it still continues to grow and grow. We've got Powell speaking right now, so I'll check that out after this to see what kind of hints he's giving us. But after having really comments that sounded like they weren't going to hike rates at all, just in the last 48 hours, we've had some of the Fed speakers come out and throw out numbers between 50 and 75 basis points, which I kind of doubt will actually be the case. PBOC, one central bank that's not waiting around to ease policy, is the People's Bank of China, which this morning cut its reserve ratio by 0.5%. I like following the long view on Twitter, saying that the bond market is getting whatever it wants, forcing the Fed to react to where they drive rates. And from what I've been noticing, it seems like the big banks who are buying up these bonds at super low interest rates, even negative yielding rates around the world, they're forcing the central banks to come in and exit their speculative bonds. And they continue to pound these rates lower and lower until they get what they want. So I do suspect this trend will continue until we finally get the Fed to come in and say, all right, we're going to start pegging our yield and purchasing government debt. And that may be what finally allows these huge banks to exit these massive positions for a profit. And if there's not fear of a tariff at that point in time, or of an escalation, we may see a massive, massive flow into equities out of all these negative yielding bonds, which are now at $16 trillion. Ray Dalio came out suggesting the Fed should slowly lower rates by only 25 basis points this round. That's what I actually think will happen. We'll see. And he lowered his chance of a recession from 40% to 25%, which is interesting. Meanwhile, the main buyer of U.S. equities has had a record offering this week, $74 billion of high-grade corporate debt. Where's all this debt going? Stock buybacks. The people who are trading the S&P 500 at these levels have a time horizon that really never ends. You know, if you think about it, the corporation lives beyond its shareholders. It's its own entity, and it's buying its own shares. So they don't really care if there's drawdown in its own shares. And they continue to pile into buying back their own shares at record pace. Why is the Fed cutting rates besides the market wanting it? China Commerce Ministry trade call this morning went very well. What a joke. Hipster trader, don't forget this week's rally could be killed by one tweet from Trump. Just comedy, but very true, and why we have the put option underneath our SPY at all times. Wall Street Journal article came out hinting that there would be a 25 rate cut basis point, and which is what we're starting to get used to, is they seem to go use media outlets to hint at what they're going to do well in advance, so that the market has a pretty clear view of what will happen. Here's the most important currency to track. The renminbi against the dollar, the Chinese currency. Whenever this starts to rise, it means China is devaluing, and typically we shortly see within hours after a major rise in this conversion rate, we start to see pain in the equities market and big moves up in bonds. So right now, everything we've predicted is happening. We're seeing the bond market cool off, equities market get hot, trade war is in a pause mode, and I think this can last into some time into October. It just depends. If the SPY gets above 315, I'm quite confident Trump is going to come out and start poking the bear, China, and trying to cause some more trouble in their economy. Here's the bigger view of the conversion rate. My expectation is this conversion rate will go much higher, towards 8 or 9 in the coming 12 months. And in our boot camp, I'll actually be teaching investors how to take advantage of that in the Forex market. You really can't achieve betting against the Chinese currency in the equities market. You can buy the Yang ETF, but the problem is these Chinese banks, the whole Chinese system is a closed system where they control everything. So you may not see a huge sell-off in their own state-run equities, because they may just manipulate the value of those stocks. But on the other hand, what they apparently cannot control is the exchange rate of their currency. And it does appear they are slowly but surely losing control and having to devalue their currency. And we can see all the major currency pairs are losing value against the dollar, which supports our concept that money will continue to flood into U.S. markets. I used the German bond to try to get a prediction of what the Fed will do. So we've seen a little bit of a pause in the collapse in yield. And again, this is the the German bonds where you pay them to lend them money. Having a little bit of a break, but I suspect the trend will continue to go down in terms of bond prices going up and yields going even more negative. And again, until the central banks step up and start to buy up all the bonds that have been speculated on, allow these huge banks to take their profit and exit, I don't think we're going to see this trend stop. Here's a look at gold hitting 1500 level. And I think it can go substantially higher because we're coming to a point in time where the banks are going to have to support their bond markets. Here's a look at silver. I suspect by the end of the year this will break to a new high. And so we'll try to play that in our Tuesday trade. Keeping a close eye on oil. I like it at 60 for our current trade setup. If it goes too low, that would make me nervous about growth prospects. If it gets too hot, that can create inflation, which may cause the Fed to have to either slow down raising rates or actually raise rates, which would be very negative for everything in our portfolio currently. And meanwhile, Bitcoin continues to be bid, which indicates to me that the trouble is still stirring up, that the trade war will continue to escalate. If we look at our stocks, kind of a surprising sell-off in Facebook. We were sitting on a nice profit on that yesterday, but we had quite a sell-off this morning. But we're still long that, I suspect, with some sort of bullish comments today from Powell that this will rocket higher. And we're seeing all these tech companies kind of struggle today, even though the SPY is up, which is actually good because we'll look at some charts in a second. All the European and Chinese stocks I track are healthy, which makes us bullish on our SPY trade for over the weekend. Here's a look at the SPY. I'm expecting it to break into new highs in the next 60 days or less. TLT, I think, is just taking a short breather before it will rally higher after the stocks get to new highs. Here's our look at Facebook, which we'll be riding until the SPY breaks above 300. Then we'll rotate into Microsoft. Here's this little sell-off. We were sitting on quite a nice profit, maximum profit yesterday. We'll see if it can jump back to that level. LQD, this is the ETF to follow. As long as this is in an upward trend, it's going to be very hard for the U.S. equity market to have any weakness because this indicates corporations can borrow for next to nothing, reinvest the bonds into buying their own stocks. And again, these corporations have almost an endless horizon in terms of how long they're willing to wait for their shares to generate a profit. And so if they have the outlook that all these central banks are going to dramatically increase the monetary supply, they really don't care if there's a little bit of volatility in the near future as they continue to pile into their stock buybacks, pulling out the total amount of shares that are even available for sale. And all of this points towards a very bullish U.S. stock market without Trump and President Xi tweets indicating that they're going to war. So here's GDX, the gold miner ETF. Little sell-off. I suspect this has much more room to go in the next 12 to 24 months. Buy the dip. Here's the Russell 2000. For me to think the SPY could go above 330 and maintain that, I need to see this chart become more bullish and get past that resistance level that's failed several times. So this is where Stanley Druckenmiller uses this to predict the stock market. He calls it the middle of the stock market. So far, it's hanging in there, but it's still lagging against the SPY. You can see a lot of buying coming in. And that is a wrap for today's presentation. So I'm going to hop off and listen to the Fed speech today, which is going on right now. Hope everybody is enjoying our content. Got to take the trades, make big profit this week, and we'll see how we perform next week. Thank you so much.